Hey there guys, you're here with Bo. Thank you for tuning in to another video, and today we have a really exciting article here from CoinDesk. The SEC begins accepting public comments on ETF backed by Bitcoin and T-bills. So we may actually have one of the first Bitcoin ETF approvals just around the corner. Things are feeling right. The market conditions are feeling right for an ETF to be approved. Given the current bull market, news like this could really send things absolutely skyrocketing as we finally have an easy form of capital inflow to come into Bitcoin, as people can just buy shares off an exchange such as the New York Stock Exchange. So this is incredibly exciting news given the current market conditions and the regulatory landscape in the United States. So today we're going to get right into this article. We're going to have a little bit of a look into the New York Stock Exchange and a couple of other things that go along with a package such as an ETF. So guys, thank you for tuning in. Stick around and let's get into the video. So welcome back to the video, guys. You are here with Bo Stoner from Cryptocurrency Australia, your home for everything Bitcoin, economics, and politics. Now today we've got this article here from CoinDesk. SEC begins accepting public comments on ETF backed by Bitcoin and T-bills. Now reading into this article. The US Securities and Exchange Commission is kicking off the public comment period for a proposed exchange-traded fund backed by Bitcoin and Treasury bills. The SEC published a rule change proposal Tuesday, which would allow Wilshire Phoenix funds to list shares on the ETF on the New York Stock, the NYSE ARCA exchange, announcing the beginning of a 21-day public comment period. The document must still be published in the Federal Register before this clock formally starts, though the regulator is already accepting input. Wilshire Phoenix and the New York Stock Exchange ARCA applied for the rule change proposal last month, hoping to offer shares in the United States Bitcoin and Treasury Investment Trust. The fund manager would oversee the trust, investing exclusively in Bitcoin and short-term US Treasury securities. The firm tapped Coinbase custody wing to hold the trust's Bitcoin, with $200 million in theft insurance covering its holdings. Under US law, the SEC has 45 days from the filing's publication in the Federal Register to make an initial decision, though it can extend this to 90 days. The regulator is already assessing a number of other ETF rule change proposals, most notably submissions by Bitwise Asset Management and VanEck SolidX with CBOE Global Markets. The SEC has extended its deadline on each proposal several times, with its next decisions expected in mid-July. So over the past couple of years, we've seen many ETF proposals get extended a number of times by the SEC, only to be denied time and time again. We are yet to see a single proper Bitcoin ETF fund. We do have the Bitcoin Investment Trust by Grayscale, although that's a little bit different in how it operates. We are yet to see a proper Bitcoin ETF. And the importance of this in terms of Bitcoin's price and the ease at which it'll be for people to gain access to Bitcoin really can't be underestimated. Back in the bear market, many people were speculating on what would pull the market out of its bearish conditions during the worst times, and many people, including myself, said the approval of a Bitcoin ETF is what we need. That's how significant it is, because an ETF allows investors to buy a share off a stock exchange, so they can use traditional brokers, they can use their traditional brokerage accounts to just buy some shares off a stock exchange, and holding that share gives them access to Bitcoin's price movements without them having to buy Bitcoin themselves and store it. So you don't have to worry about custody. You don't have to worry about the technical component of Bitcoin. You can just gain access to Bitcoin's price volatility simply by buying shares off a stock exchange. Not only that, but it opens up Bitcoin to endowments, to trusts, to investment funds, to pension funds, who traditionally use exchanges like the New York Stock Exchange and other traditional stocks to gain access to different commodities and assets. So an ETF for Bitcoin is a huge deal. And I don't know if it's just me, but with a lot of the things that have been happening lately, not just in regards to the price, but in regards to the significant maturation of crypto and regulation, this is feeling like the best time ever that an ETF could be approved. I am the most confident now than I ever have been of an ETF being approved. So this is a really big deal, given that the SEC is now accepting public comments, given that we know the head of the SEC, Jay Clayton, is generally fairly neutral, if not slightly positive towards cryptocurrencies. This is a very, very, very exciting development. Now, when we have a look into, just a little bit about how these ETFs actually work to give you an idea, here we are over on the New York Stock Exchange ARCA equities, and this is just one of the exchange components of the New York Stock Exchange that would list the stocks related to this fund. So people would buy stocks off the New York Stock Exchange, then this fund would go and buy the Bitcoin and then store the Bitcoin on behalf of the person who has bought that stock. So they don't have to worry about buying Bitcoin. They don't have to worry about storing it. That's one of the huge advantages to an ETF. We can see over here the actual filing from the SEC, the Securities and Exchange Commission. And just to see self-regulatory organizations, NYSE ARCA Inc., notice of filing a proposed rule change to amend NYSE ARCA rule commodity-based trust shares and to list and trade shares of the United States Bitcoin and Treasury Investment Trust under the New York Stock Exchange ARCA rule. So very exciting stuff. Now, what you probably picked up on in the article is that this ETF will be using Coinbase Custody. This was a product that Coinbase rolled out in 2018 as part of an industry-wide improvement in custody solutions. Now, Coinbase Custody is a product specifically designed for institutions who need a custody solution. So institutions or investment funds that want to create a fund centered around Bitcoin, but don't want to have to worry about buying the Bitcoin themselves, storing the Bitcoin safely, ensuring the Bitcoin, can use products like Coinbase Custody as like a third-party solution to perform that function for them. So it's incredible now that we have products like this that were not here 2 years ago. This is why it's looking more and more positive that an ETF would actually be approved, because we have mature custody solutions with credible organizations that have been around for a few years that have proven themselves from a security standpoint, like Coinbase. So it's very, very, very exciting stuff. Now, moving on, I just want to cover this one other article because it's kind of similar in terms of the current regulatory condition, and it's another exciting development for Bitcoin and crypto. And the title of the article here is The CFTC Approves LedgerX to Settle Futures in Real Bitcoin. Wow, that is huge. Reading from the start here, the Commodity Futures Trading Commission, the CFTC, has cleared Bitcoin derivatives provider LedgerX to offer physically settled Bitcoin futures contracts. The CFTC said Tuesday it had approved LedgerX's application for a designated contract market license, meaning the company can now offer the new futures contracts. LedgerX is the second company to receive approval to offer physically settled Bitcoin futures. Other firms, such as intercontinental exchanges Barked, Seed CX, and ErisX, plan to enter this market. While Bark's own futures contracts have been self-certified, the firm is waiting for the New York Department of Financial Services to license its warehouse. Unlike the cash-settled Bitcoin futures listed by the Chicago exchanges CBOE and CME, in physically settled futures, the buyer receives the underlying commodity when a contract expires, rather than the fiat equivalent. So this is huge, guys. This means that when people are placing futures contracts, Bitcoin, actual Bitcoin, is being locked up in these contracts until the contract expires. Now, what's that going to do for the current supply? Like, depending on how much this grows, you're having actual Bitcoin come off markets and go to being locked in contracts. This is hugely exciting because it's also removing the fiat component and placing more value in terms of Bitcoin as money being used in these contracts. It's incredibly exciting stuff. Reading on. Monday's approval means that New York-based LedgerX can not only list these Bitcoin futures contracts, but crucially can offer its products to retail clients, not just institutional ones. No timeline was provided for when LedgerX might start to offer futures, but Chief Operating and Risk Officer Jathika Chow told CoinDesk that the company was looking to be the first provider of this product in the US. There's no doubt that we're looking to be the first, we're looking to be the incumbent, she said. We think we're better positioned and we want to be there to serve customers of all sizes. LedgerX would follow the same self-certification process that it already underwent to offer swaps and options, Chow said, adding, ultimately, the products are not that economically different than what we're currently offering, but this would open up to a broader market. Now, just reading this last paragraph here. While Barked has previously announced that it would be testing its own physically settled Bitcoin futures contracts in July, a firm launch date has yet to be announced. Seed, CX, and ErisX have likewise not yet announced when they would launch their futures contracts or forwards in Seed CX's case. Now, if we come over here, we can actually see this is the website for LedgerX. Trade Bitcoin spot, options, and futures all on one platform. And now they've been approved to settle these contracts using physical Bitcoin. So this is extremely, extremely, extremely exciting stuff, guys. So guys, that's it. Generally what we're seeing is the regulatory landscape and these products are just going from strength to strength. So we've got the price on one hand going up, and then we have these like institutional investment grade products getting closer and closer to being approved, or in the case of LedgerX, actually being approved. So like the future has never been so bullish, actually, personally. Things are just looking absolutely amazing. So I'm going to be keeping an eye out on this ETF and its progress. And let me tell you, if this gets approved, and we have some other ETFs following that get approved, it could be a very, very exciting 3 to 6 months. So guys, that's it from me. Thank you so much for watching. If you liked the video, the likes always really appreciated. Don't forget to subscribe for all things Bitcoin, economics, and politics. My name's Bo. I just want to say thanks again for watching. Don't forget to leave a comment, and I'll catch you in the next one. Cheers.